What's up, guys? Well, wait a minute. That's better. Welcome back to Joe Vester Trades. My name is Joseph, and in today's video, I will be going over how to use the RSI, what it does, and how it can help you make money. Now, the RSI is a very easy and simple to use indicator, so I hope you guys stay tuned. But if you're going to enjoy this video, make sure to give it a thumbs up and subscribe for more trading content. And if you want to be a part of a trading community with over 1,000 members, make sure to check out the Discord channel in the description down below. So first things first, I'll take you guys through the charts and how to add this indicator. I do use the platform called Think or Swim on TD Ameritrade, but for those of you who use Tradingview, I can show you on there as well. And if you don't know what Tradingview or Think or Swim is, it's just platforms where you can analyze charts on. So first things first, you want to go to Studies and then Add Study. And if you hover over all studies and go down to R to S, you'll see that it's the first one at the top, RSI. And RSI has two names. You can call it RSI, but it's short for Relative Strength Index. And it's basically a number from 0 to 100, where if the RSI is above 70, it tells you if the stock is overvalued. And if it's under 30, it'll tell you if it's undervalued. And if we go to Tradingview, you can click Indicators at the top, search RSI, and it'll be called Relative Strength Index. And then it'll pop up right there. So if we go back to Think or Swim, I'll take you guys through 3 examples in which having this indicator can help you make money and better time your entries. So the first thing is Home Depot. And right off the bat, on this stock, Home Depot, I noticed that it has a clear support level. And if you know anything about support, it's just a level in which the stock typically bounces from. So I'll draw this out for you guys right now. You can see Home Depot around this level likes to bounce off of, and this is called pretty much a support zone or supply zone. And the great thing about the RSI is that it reacts really well to the price movement of the stock. As you can see here, Home Depot is around $295 and it starts to pull back to the support zone. And right as it pulls back into the zone, you can also see that the RSI is undervalued or oversold. And this is where you want to be buying your stocks. Up here, when it's overvalued, is where you want to be selling your stocks. So this is great for swing trading or even long-term investing. And as Home Depot starts to rise back up to the top, you can see that the RSI rises with it and approaches the overbought territory. So this is pretty good for entries and exits and better timing your plays. As you can see, as it goes into the zone multiple times after again, it becomes oversold on the RSI. And I'll show you guys another example of this on Netflix. Now, Netflix is a really good long-term company. It's had massive growth, and right here you can see it's around $400 at the start of May, and it rose all the way to about $600. And if you want to hop into Netflix for long-term investing, you don't really want to be buying at all-time highs. You want to wait for the pullback. Well, how do you know when the stock is pulling back? You can simply look at the price action or just use the RSI indicator. Right here, as it's at 600, you see it's overbought on the RSI, which is very high. It's actually at 90 out of 100. But if you wait for the stock to pull back to oversold, you'd be getting a better deal. And you'd make more money on the stock as it goes up in the long term. And right here, you can just see the price action of Netflix, kind of similar to Home Depot. It goes down to this level, becomes oversold, goes back up, becomes overbought, and it kind of repeats that same thing or same price action. And then for you long-term investors, if I go to ARKK, which is a nice ETF for long-term investing, it has multiple holdings within this ETF, has a lot of tech, healthcare, and consumer goods. You can see that it's had tremendous growth over this year. But you don't really want to be buying an ETF at its all-time high, as I stated before. You want to wait for the pullbacks, and this just gives you more bang for your buck if you're waiting for these pullbacks to happen. Right here, you can see ARKK is overbought. It's at $147. and I wouldn't really be buying here. I would wait for this pullback until it becomes near the undervalued territory. And this is very, very useful, especially for beginners if you don't know anything about the stock market, because this one indicator can save you a lot of money and kind of give you an idea on whether or not you should hop into a trade. Another thing I want to mention is that just because the stock or the ETF may be overbought on the RSI doesn't mean it can't go any higher, and just because that it's oversold doesn't mean it can't go any lower. You don't want to use the RSI only to make a buy or sell decision. You want to use it along with other price action movements and indicators or even moving averages to get a better idea on whether you should buy or not. For instance, if we go to Tesla has had tremendous growth this year, and as you can see right here towards mid-December, it starts to become overbought, and it's around $700. And it actually stays overbought for a while and keeps rising up and goes all the way up to $885. So as I said before, this just gives you a general idea on if you're getting a fair deal for the stock, and you don't really want to be buying around these levels. You want to use support and resistance as well as other things to let you know if you should buy the stock or not. As you guys can see, the RSI is a very useful indicator as many traders use it, and it can be extremely helpful when you're first starting out. Let me know what you guys think about the RSI in the comment section down below. And if you enjoyed the video, make sure to give it a thumbs up and subscribe for more trading content.